As I have been talking about on this podcast, the specter of less loose monetary policy continues to drive the great rotation out of the momentum stocks, the overpriced stocks that enjoyed the huge benefits of the bubble are now collapsing as the Fed has effectively pricked that bubble, not by actually tightening policy, but simply by talking about tightening policy. That's all it took to prick the mother of all bubbles. But as the air is coming out, that air is flowing into the value sector of the global markets, which have been overlooked for the entirety of the move up, as people were using those stocks as a source of funds, selling value dividend-paying stocks to free up the capital in order to invest in the momentum stocks, because there was a huge opportunity cost. Even though a lot of these stocks looked cheap, nobody wanted to buy them, because if you put money into a value stock, that was money that you couldn't put into a momentum stock. And even if that value stock looked cheap and paid a good dividend, that paled in comparison to the appreciation that was being enjoyed in the speculative end of the market. Well, that greater fool theory dynamic always ends badly, and we're seeing that now as the bottom is dropping out of these stocks. The carnage this week really got started on Thursday, because Thursday morning we had a rally in the market. In fact, the Dow, I think at its high point, was up 450 points. And remember, bear markets slide a slope of hope, and you get a lot of big rallies, usually early in the morning, and those rallies engender some false confidence. People think, aha, the bottom is in, I'm glad I didn't sell. But of course, then the real move continues. Investors take advantage of higher prices to continue to unload overpriced stocks. And that's exactly what happened, because that 450-point rally turned into a better than 300-point decline by the close. That was a 2.2% reversal from the high to the close. It was even more spectacular in the NASDAQ. The reversal there was 3.2%.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now,
I think one of the catalysts for the reversal, but I think it would have happened anyway, so I don't necessarily think that this is the reason, but it certainly gave investors a reason to pause. And that was news that broke about Peloton, that they were going to suspend production of their bikes, because obviously they had already produced too many during the pandemic and the demand is not there, and so they don't need to make any more. And that caused a big drop in the stock. I think it fell about 15%. And I think that caused people to worry, hey, look what's happening to Peloton. This could happen to other stocks. Demand is not what we thought, and this could apply to a lot of companies, not just Peloton. So I think other stocks were sold in sympathy. Now, Peloton actually rallied back about 11.3% Friday, so it didn't totally recover what it lost, because I think the president came out and said the rumors were false, we didn't halt production, so there was a bit of a rally on Friday. But that rally didn't help the rest of the market, which was actually reeling from the news that came out after the close on Thursday from Netflix. Now, Netflix has been one of the darlings. It was one of the key stay-at-home trades. After all, people that weren't going to work were staying at home and they were watching Netflix. And so that was a primary beneficiary of that trade. Well, after the market closed on Thursday, Netflix reported earnings. And though the earnings were better than expected, the subscriber growth was well below expectations. And that's all it took to cause the stock to immediately tank about 20% in after-hours trading. It was down as much as maybe 25% on Friday. It closed slightly off the lows down about 22% on the day. That brought the weekly decline to 24.4%. So far this year, Netflix is down 34%. The month of January isn't even over, and we're now down 43% from last year's high, solidly into bear market territory for Netflix. And also Netflix is a victim of its own success. Look at all of the streaming services that people have to choose from. That's what happens. You become successful and then you get competition. That's why it's dangerous to bid up prices on stocks like a Tesla because, hey, they've got this great product. They're in electric vehicles. Yes, but if you're successful, other companies come in and eat away at your market share. And so investors don't get the type of dominance that they expect. And Netflix has all sorts of competition right now. In fact, earlier in the week, Netflix announced, and I mentioned this on my last podcast, an 11% price increase for their service. And one of the reasons they may be raising prices apart from inflation is because they can no longer drive earnings by picking up more subscribers because it's too competitive out there.
I have bad news for you. If you're not rich by now, you're screwed. And if you're in debt, you're even double screwed. How so, you might wonder? Well, the sad truth is that you're working your whole life to make someone else rich. The mega corporations, the banks, the politicians, everyone is getting richer. They get your money. And what is even worse, they get your time, they get your life. You are not even in a rat race. You're in a financial prison. But what could a solution for you look like? Honestly, I don't know, but I know what a solution for me would look like. It's very simple. I use whatever money I have and I multiply it with 1,000. This could make my life much easier and probably yours as well. If you have $1,000 available and multiply this with 1,000, I believe that this could solve some financial issue for the one or the other. Of course, if you're ugly, you would have to multiply it with much more than 1,000. My name is Markus Dahn, and this is what I decided to do. I decided to 1000x my money. This is not a joke. I know what you may be thinking. What is this guy talking about? How should this work? This is not possible. Well, I made a detailed video where I laid out my plan. And some clever folks might even want to look at this plan and copy it and do exactly what I do. This is just a little hint on the side. You have two options. You leave, you forget what you have seen. You do whatever you're doing and you hope that somehow you get some other results. Good luck with that. Or you click the link below the video. You enter your email address because I'm not showing this to everybody. You at least watch my video on how I plan to 1000x my money. The choice is yours. Make the right choice. Join me. See what a different future you could have. See at least how I plan to do the 1000x. So click on the link below, enter your email address, and I see you on the other side. Your Markus Dahn.